Welcome back to Next Gen Investing. It's now time for Under 30. Today we are talking Applied Digital, as this name is always a mover, always has really strong volume, and today is no exception as we're closing out this week up now 18%, now about 16%, but jumping around and still definitely firmly a green day nonetheless. So joining us now is George Tsilis, Senior Markets Correspondent for the network. So George, walk us through this story here of Applied Digital, a name that's gained a whopping 330% this year.
Yeah, really good move this year and year to date, and of course over the last 18 months or so for a lot of these AI as a service based companies. And Applied Digital is much like a core weave when it comes down to the long standing AI data center build out. This is a company that's really focused on things like crypto mining initially, but has actually morphed into language processing, graphics rendering, and machine learning. And the deals that this company has secured over the next few years, 15 years in fact, over $7 billion. And that's important in the context of the total sales, which if you look at the last year, effectively were around 170 million. So it's a significant increase estimated in terms of sales. And the company seems to be generating growth alongside those deals outstanding. If you look at the report too, so there was a catalyst today. And that happens to have been the earnings report for the previous quarter, and the company posted 3 cents of a loss per share. Now that was better than the estimated loss of 15 cents. So they're getting closer towards the zero bound or adjusted profitability, at least on an annualized basis. And if you look at the sales numbers too, they're quite impressive. $64 million, up 85%, besting the estimates by around $19 million because they were estimated to be around $45 million. So we are still seeing a trend continuation Applied Digital, which has been a remarkable mover this last year and could potentially continue to move from here, considering if you look at the revenues last year, like I mentioned, around 173 million. They're expecting in 2026, 209 million, but going forward into 2027, that number is jumping about 150% to 490 million. So it looks like to me they can't keep up with the build out demand based on the revenue estimates next year compared to last year.
Okay, I know that they've also secured, major funding, like we've seen with Macquarie right now. They've had these massive funding rounds, which is encouraging, and also this partnership now with CoreWeave, which is for an additional 150 megawatts of power. So these are all positive developments, but I tend to hear some of these names that have become really frothy. Really have run up this substantially this year. Is there then any risk to some of this narrative when you look at the fundamentals and say, does it all add up to the same strength that we've seen from price performance?
Yeah. Well, yeah, so there's always going to be risks. And, when we look at stocks that are moving like this, you have to, ask yourself why and can it keep up? And I guess that's what you're alluding to, Jenny. And it's a great point to bring up because it is moving in a parabolic capacity to the upside. You have to consider, where the company is and where they're expected to be. If you look at EPS for this year, they're expecting to lose 50 cents a share. Next year, 30 cents a share. So again, they're getting closer to profitability, but it looks like they're still a ways off. Now, if you look at the cash burn in the last year, they lost $200 million on 173 million in sales. So again, they're losing more than their total sales, but that can be offset as long as sales accelerates pretty remarkably going forward and losses start to come down. So with that said, this is a high beta name, and I suggest it's moving today because of the news, which is very positive. It's typically, I would call it a mid-cap company, around $8 billion, so it's easy to push around. But you have to consider also the context of the market. I suggest perhaps if Applied Digital didn't have earnings today, it may be down with the sympathy with the rest of the market. So again, looking at the trend, still very positive. And you could also maybe use a 10-day moving average as a proxy of support. If it breaks below that, look for a 20-day moving average as the next level of support. But if that doesn't happen to be the case, then these trends can certainly continue for quite some time.
Yeah, a good point there that we had a catalyst that's partially the reason we're seeing, I'd say solely probably the reason we're seeing this move today to the upside, outperforming the overall market. But amazing that they've actually been able to hold on to the level that they have. I was keep waiting for this stock to drop with the overall market, but seemingly not the case, at least not so far. We do have still some time left, of course, in this trading session. But appreciate it, George, for the commentary today and all week long.